The Fed15 podcast is presented by Serving Those Who Serve, a financial planning practice serving federal government employees and retirees all over the country. This podcast is for informational purposes only and is not intended to be taken as financial advice. All listeners should consult their personal advisors before taking any action. The opinions expressed by our hosts are their own and do not reflect the views, policies, or position of either Raymond James or Serving Those Who Serve. Securities are offered through Raymond James Financial Services, Inc., member FINRA SIPC. Investment advisory services are offered through Raymond James Financial Services Advisors, Inc. Serving Those Who Serve is not a registered broker-dealer and is independent of Raymond James Financial Services, Inc. Welcome to this week's episode of the Fed15 podcast presented by Serving Those Who Serve. Each week, we'll discuss the latest news and info that feds need to know in 15 minutes or less. So whether you are a seasoned federal employee or whether you're just starting out in your career, Fed15 has got you covered. So grab your coffee, kick back, and we'll tell you what you need to know but might have missed. We are your hosts. I am Katelyn Murray, and I am joined by the exuberant Mr. Dan Sight.
Yes, I am full of energy, which for a man of my age, that's always a good day.
I thought you were going to say for a man of my age, that's very dangerous.
No. It's funny. I remember I can't remember the exact time it started, but I remember there was a time whenever I would call my dad or something like that, say, "How you doing, Dad?" He goes, "Best day of my life." And so I thought that struck me as odd. It's like, what do you miss the best day of your life? What about the day I was born, Dad?
Right? Yeesh.
How about when you married Mom? That type of thing. But waking up energetic after, I'll just speak for myself, not for the rest of the world. After, shall we say, Medicare age, waking up energetic with minimal pain.
That's a good day. Yeah, that's a good day. I'm with you. Love it. All right. Well, we've got an exciting episode for you guys today. As you know, we've kind of been talking through, making sure that we're covering all of the regular baseline, shall we say, benefits, education topics, the stuff that's always there, right? You need to know more about TEGLI. You need to know more about FERS. You need to know more about FEHB. But also kind of living in the world of the current and kind of keeping abreast with what's going on in the federal space and being prepared for the current climate, right? Navigating that. Today's episode is a little bit more on the current climate side of things. Dan's going to be talking with us about the future of federal employee unions and collective bargaining rights. And then a little later on, I am going to touch on emergency financial planning for feds and how you can stay prepared or get prepared for the unexpected. So important episode, some really important information for navigating today's climate and the federal government. So Dan, talk to us a little bit about federal employee unions. This is a really interesting topic that before we put this piece out, I didn't know as much about as in depth. So I thought this piece was really interesting.
Yeah, they're in a lot of ways, they're different from what people classically imagine as a union like the AFL or CIO or even UFCW, Food and Commercial Workers. But they do fill an important role in the whole federal employee, federal government relationship. And this isn't the first administration, to want to reduce their influence. So, with our article, we're helping to make sure people understand the role that the unions play. So understanding the collective bargaining, again, differ in scope and authority from traditional public sector unions. And the bargaining focuses primarily on work schedules, performance reviews, telework policies, disciplinary procedures. It's governed by the Federal Service Labor Management Relations Statute, and it permits most executive branch employees to join a union. It establishes labor management negotiation processes. Now, the unions can't strike, and they face a stricter legal constraint than private sector unions, but they do serve as key representatives in workplace disputes and reinforcing due process protections, which, as we know right now, is kind of a hot topic. So potential challenges and policy changes. The federal unions are under increased political and legislative scrutiny. Some of the proposals seek to narrow bargaining topics. They push to reduce official time. So if you're active in your union, you know what that means. If you're not, what it means is the amount of time that you can spend during your workday on union activities. They want to reduce that amount. And also changes to the grievance and dispute resolution procedures, which kind of go back to that due process part. And shifts in Federal Labor Relations Authority leadership may also, alter the enforcement of some of these labor laws. So in addition, there's the budgetary constraints and the pressures there that may limit agency flexibility in negotiation. It can accelerate agency-led operational changes, sometimes bypassing negotiated agreements. I think you can see where that would be a problem. So how could changes affect pay and benefits and job security? While unions don't directly set pay, they advocate for transparency in step increases, fair implementation of locality pay and COLAs. And erosion of their power could lead to reduced employee input on pay-related decisions, weaker protections against layoffs, disciplinary actions, or unfair treatment. Now, continued union advocacy helps to protect your FEHB, for example, pensions, telework policies. So what should you be doing? Number one, stay informed. Okay. Policy shifts can occur without widespread notice or explanation. Best practices for staying prepared: maintain contact with union representatives, monitor updates from the Federal Labor Relations Authority and OPM, follow reliable workforce news sources. Okay. A Facebook doom loop is not necessarily a reliable source.
Reddit, not necessarily a reliable source. Anyone can post there, regardless of their knowledge of federal benefits.
Exactly. So, Katelyn, as you know, I spent a fair amount of time out in the message boards, and it really hurts my heart. It really hurts my heart when I see the anxieties that's stirred up by a well-meaning but incorrect statement being put out there. So the best advice that we have for you is familiarize yourself with your union representation and stay informed. And we do our best to cover things here I'm not going to say unbiased because we are clearly pro-Fed, but we want to make sure that you have the right information. So there are plenty of good sources out there. GovExec is a great one. Our folks at Federal News Network, great source. And of course, us at STWS serving in the Fed Zone. So happy to help you there. Yeah. So Katelyn, tell us a little bit about, financial emergency planning, because, we've hit on this in a number of ways, but I think this is pretty much a core, financial planning strategy too. And of course, as we all know, you are the dubbed by our audience financial lady.
Lady. Love it.
Yes, you are indeed. So take us through that.
Yeah. So this is, as you pointed out, Dan, this is a drum that I've been beating for a while. I think, looking at for a number of reasons, right? Not just what's happening in the federal community, but also what's happening economically, right? A lot of folks are concerned about a recession. They're concerned about all of this tariff talk and the impact on the markets, and really preparing for that is an important topic, which is why we're beating the drum so hard on this. So this piece that we had on the blog this week, Emergency Financial Planning for Feds, Preparing for the Unexpected. You can consider this sort of a primer for getting your emergency financial planning together. And this is really, we could call it a foundation. This is a foundational element of your financial plan. So we talk a lot about, federal employee benefits, right? We talk a lot about FEHB before retirement, in retirement, what the qualifications are to take that. We talk a lot about your first pension, how to get the most out of that. We talk a lot about retirement planning and cash flow strategies. But before we can get to taking care of the you of tomorrow, we have to make sure that the you of today is secure. And so that's what I mean when I say this is a foundational element of your financial planning. So obviously, things going on in the federal government right now, widespread layoffs, restructuring, particularly that DOGE element, are challenging the stability of the federal government and also of federal employees, of civilian employees in particular. In response, emergency financial planning has become increasingly important, and that's why we've talked about it to an increasing degree. So, what is
emergency financial planning. What is this foundational element? Well, the first thing that you want to really zero in on is your emergency fund. Do you have enough emergency savings to get you through a tough period? Now, how much is too much? How much is, enough? Emergency savings can provide critical financial security during periods of job uncertainty, furloughs, or unexpected expenses, because here's the thing. Hailstorms are still happening during all of this uncertainty, right? Tornadoes are still happening during all of this uncertainty. Sure. Storms are still happening during all of this uncertainty. So something could happen that is totally unrelated that could be an unexpected expense for you as well. So our suggested target, and this is really a starting place, is about 6 months of your essential or non-discretionary expenses. Now, when I say non-discretionary, I don't mean pedicures. I don't mean,
come on,
the newest tech. I don't mean stuff that you don't have to have. What I mean is make sure your mortgage is paid so they can't take your house.
Yes.
Make sure that you've got electricity so that you can have heat in the summer heat in the winter and cool air in the summer. Make sure that you've got a grocery budget worked in because you've got to eat to stay alive, right? So
Absolutely.
Non-discretionary things, the things that you would have to spend money on even if you lost your job. So starting at that 6-month target, you really don't want to dip too far below that. And if you're below that right now, totally fine. It means you've got something to work on and something to work towards. If you say, Katelyn, 6 months seems kind of dicey. I don't know that I feel very comfortable with that. Risk-averse individuals can adjust that up to 12 months, so a year's worth of non-discretionary expenses, or even 24 months. I've got friends in the profession who are CFPs who just are very risk averse for their own personal, financial planning, and they keep 2 years worth of an emergency fund. Here's the thing. You want to make sure this is separate from your daily use accounts. And if you are the type of person, and there's no shame in this, if you are the type of person that tends to do the overdraft protection, right, where your savings is linked to your checking, and you've spent your checking down and it pulls from your savings automatically so that you don't have an overdraft. If that happens to you more than once a month, you might want to consider keeping your emergency fund at a whole separate banking institution, because you've got to build up that discipline that this is a separate pot of money that we're not dipping into for regular daily expenses. The other thing that's really key is you want to make sure that you're keeping those funds in a high yield savings account. Okay. You want to have the liquidity of cash because it's an emergency fund. You could use it at the drop of a hat in the situation of an emergency, but you want to make sure that this is earning something. And ideally it's earning enough to keep up with inflation. Okay. So there are a lot of great high yield savings accounts there. I'm not going to make a specific recommendation on this podcast because I don't want to make a blanket recommendation, but Google NerdWallet is a great resource for looking up, different yields and things like that. There's lists that are updated every month with the current yields. So having this cash readily available increases your flexibility in crisis situations, whether that's related to your job or not. And it also increases your sense of security and stability. So you may say, Katelyn, why would I set all this money aside? If an emergency doesn't come up, then it's kind of the same argument as with insurance, right? If I don't die, then my family doesn't get all this money and I paid all these premiums for nothing.
Gotcha.
No, you paid these premiums for the peace of mind that if something does happen to you, your family's going to be okay. Same thing with the emergency fund. This is your kind of backup plan. This is your rainy day fund that gives you the stability and security to be able to say, you know what, if something does happen, we're going to be okay. And we're going to be able to pivot because I've set this aside. So that's really key. The next kind of thing that you want to make sure that you're doing is in particular times of turmoil, right? I'm talking maybe recession times. And I want to be clear, I'm not predicting a recession. That's not what's happening here. But what I'm saying is if you are concerned about that, one way that you can take action in a helpful and healthy, financially healthy way is to build a little extra savings cushion. Maybe your normal emergency fund is 6 months worth of non-discretionary expenses, and you want to take the next year to build that up to a year's worth of non-discretionary expenses. just kind of buffering a little bit. Perfectly fine idea. So some strategies that you can use to work on that is set up some automated savings, set up recurring transfers. And this can be small, folks. You would be surprised. $25, $50 per paycheck. A lot of employers will allow you to direct a portion of your check, direct deposit wise, into a separate bank account. So if you've got one checking account that's your operational account that you're running things through, set up a direct deposit of $100 per paycheck into a totally separate bank account, ideally that high yield savings account, and let it ride. You will be surprised at how much builds up by the end of the year. Using windfalls. So this would be your tax refunds, back pay, bonuses, maybe direct some of that to savings. And then reducing, of course, discretionary expenses. So discretionary would be your pedicures, would be your new tech, would be your splurges.
But Katelyn, it's flip-flop season.
Yeah, that's true.
I mean,
that's true.
That's okay. I can wear my Asics instead. All right. I'll be responsible.
So you want to make sure that you are reevaluating non-essentials to direct funds. Now, let me be clear. What I don't need you to do is what one of my beloved childhood friends growing up did right after college. He was a geologist. And he, instead of buying furniture, he just lived on pallets and built a couch out of ramen, right? I'm not telling you to do that, okay? What I'm telling you to do is take a look at things, reevaluate. Scope creep impacts all of us, and especially in the era of social media. I could write a book about this. Scope creep is very real, and our expenses, those discretionary expenses, tend to balloon if we're not keeping an eye on them. So what you may want to do is every quarter, sit down, check in with yourself, look at what you're spending on, and ask yourself if it's really bringing you joy. Now, if you are a working mom and that pedicure is the only time in a week that you get to have any kind of silence and rest and relaxation, that may not be so discretionary, right?
Gotcha.
There might be something else that you could get rid of that you're spending on that could make a bigger impact. So you want to reassess with your core values in mind and understand that what is, non-essential to somebody else may be an essential for you. Consistency here is more important than the amount that you are saving, especially in those early stages. Once you get locked into it, it's kind of like a diet. Once you get locked into it, you start really, appreciating the impact, seeing the results, and it will kind of fuel itself.
Virtuous cycle.
Yeah, you'll find yourself bumping up those amounts that you're saving. So for my folks who are also saying, well, Katelyn, you're talking a lot about savings, but I have a bunch of debt. What do I do about that, right? High interest debt can absolutely amplify your financial instability and, as a result, your stress during periods of general instability or concern. So one method that you could look at is the avalanche method. You want to prioritize your highest interest debt balances while paying minimum payments on the others. So what this looks like is if you've got 3 different credit cards that have balances, you've got a mortgage, you've got a student loan. You want to pull the outstanding balances, minimum payments, and interest rates on all of those different types of debt and those different cards. And then you want to organize them by what is the highest interest rate. Your mortgage will probably always be the lowest interest rate. And if it's for your primary home, you may not want to even fool with paying that off. But the rest of that kind of consumer debt, that's the type of debt that you want to try to get out from under. You want to try to balance the debt repayment, with continued emergency fund contributions, because paying off your debt isn't going to do you any good if you have an emergency in the middle of it and then you have to put all that on a credit card and build it back up again, right? So make sure you're striking a good balance there. And please, anytime we mention debt, because this is a federal employee podcast, be careful about TSP loans. Please be careful about TSP loans. Yes, you can do a TSP loan potentially to do debt consolidation. Yes, it could even maybe be a good idea given your financial context, but there's also a whole bunch of people for whom it may not be a good idea. And so you want to make sure that you're giving that careful consideration and potentially get some guidance from a financial professional on that. Any quality CFP would be able to advise you there on whether that makes sense. And then lastly, I'll touch on this just very briefly because I know we're definitely in the ish of our 15-ish minutes. Explore alternative income sources. You may want to look at, potential side income that could align with federal employment rules, things like consulting, tutoring, seasonal work, freelance projects. monetized hobbies like crafting, baking, or digital design, social media, that type of thing. This can increase your flexibility, increase your income and your ability to pay down debt and build up your emergency savings. And it can also help you pivot if and when a potential move to the private sector is needed, right?
Sure.
We've talked a lot about the transferability of the skills that the federal workforce has. This could be a good way to have kind of an insurance policy, right? A next place to go, a pivot point. So make sure that you are thinking about emergency financial planning. If you haven't sat down and looked at this and you're just feeling generally stressed, sit down with your finances, engage with it, and assess, do I have 6 months worth of non-discretionary expenses, or do I only have 3? And that will give you the next step of what you need to focus on in this period to get to a place where you can be a little solid and stable. I've said this before on the podcast. I'll say it again, I'm sure. Having that emergency fund in place is an unbelievable steadier to a worried conscience in times like this. So focused, consistent actions are what you want, even if they're small ones. You will be very surprised at how it can improve your long-term outcome over time.
Absolutely, folks. Your future self will be indebted to your present self.
Mm-hmm.
And that's all the time we have for today, folks. But you can be assured we'll be back next week to bring you the latest updates you need to make informed decisions about your career and financial well-being as a Fed.
Absolutely. And analytics show us that only 78% of people who are watching our videos are not subscribed, actually. So please subscribe to the podcast on our YouTube channel, on Spotify if you're listening there. You can also always find us on our website at STWServe.com. Please also remember to share it with your friends and colleagues. Help us boost the signal. Help us help more Feds.
Absolutely. And for more information on the topics we covered today and more, check out the blog. That's blog.stwserve.com, or you can just go through the main website to find it. And subscribe to our newsletter, The Weekly Serving. So we'll ship all the best stuff directly to your inbox. You don't even have to go looking for it. That'll come to you every single week.
Mm-hmm. And for those who want to dive even deeper into learning about your federal benefits and financial planning for Feds, we do encourage you to join us for one of our complimentary webinars. We've got some good ones coming up this month. Survivor benefits, our webinar detailing survivor benefits. We'll talk about survivor benefits in the context of FERS, in the context of Social Security, basically everything that you or your spouse need to know for their security. That's going to be June 24th from 11 a.m. to 2 p.m., and that will be hosted by Dan the Man. We also have our VERA Discontinued Service Retirement, Early Retirement for Feds seminar. That's coming up on June 25th, and that's going to be from 1 p.m. to 4 p.m., also hosted by Dan all the time. And both of those sessions, by the way, are offered on Zoom. You don't have to commute. You don't have to go anywhere. Nothing could be easier. So consider signing up for that. You can find that at STWServe.com. Of course, if you prefer a one-on-one approach, please feel free to reach out to our team directly for a financial planning consultation at meetings@STWServe.com.
Absolutely. So, folks, thank you for listening to the Fed15. I'm Dan Sipe.
And I'm Katelyn Murray.
And we will see you next week.